Now, some people do like to slide in here kind of fashionably late, but as long as you're fashionable, that is acceptable. So, all right, so kind of a uh, bit of a crazy week on the markets here. Yesterday and the day before were quite choppy, so we'll be kind of focusing on chop. And something else I really want to focus on too is anticipating the trade setups before they happen, having a plan of action so that we're never surprised by anything the market does. Well, it may be a pretty obvious statement, but the markets can only go up or down. I mean, I guess they could hang out at the same price forever, but that's not likely. So, based that we know, there are only two potential outcomes for any trade setup. We can really anticipate quite a bit ahead of time of what our action steps should be. I always like to have an action step far ahead of time. So I don't like to make last-minute decisions or scramble, decide, sit on the fence. Oh, should I enter this trade? Should I, that type of thing. I like to avoid that as much as possible and make as few decisions in trading as I can. So that's kind of what we'll be focusing on today. And of course, if you guys have any questions, feel free to holler at me in the questions box. All right, without further ado, let's hop into it. So first we have the CL. Not a ton going on here. Did meet quite a lot of resistance coming into the high of the day, although there was a qualified single T here with plenty of space before running into the high of the day. So could have grabbed a profit target there. Did have an opportunity for a surf short here as well. So this will be a good example of anticipating what the market's going to do. So in this situation, didn't really have any trade setups, so get a turn bar short followed by a red bar. So now I can be looking for a continuation long. Just give me 1 second. Let me get my rules up so we have a reference for all of us. All right, so at this point, I'm looking for a continuation long. So even at here, because remember, a continuation can be turn bar followed by a turn bar, or turn bar, color bar, turn bar. So at this point, I can still look for a continuation. Most of my rules are still lined up. I have my EMAs in the correct order, super trend outside of the neutral zone. The only thing that isn't lined up is my blue line being above my purple line. And I would also need to see a turn bar, which would be my entry bar. And I'd enter on the green DPI of that bar. Next bar plots, it's another red color bar, so I know the continuation is out, because the continuation can only appear in those two configurations, turn bar followed by a turn bar, or turn bar, color bar, turn bar. So we're past that point. So what is next on my checklist? That will be a single T long, because I know that if there's more than one color bar in between my turn bars, it'll be a single T. Whoops. So now, as the market continues to move short, I still want to develop my plan of action. I say, okay, my blue line, my EMAs are still in order for a single T. Super trend still outside of the neutral zone. 2 out of 4 rules. If I see a turn bar, that'll be rule number 3. but my blue line is quite a ways away from the purple line. So if I see a turn bar, I'm probably going to want to wait for it to plot to make sure that my blue line crosses the purple line and gets to the correct side. And if that doesn't happen, then I know that I can wait to enter on the first color bar. All right, so now I have my turn bar, and I see my blue line did not cross the purple line. So that is not a qualified single T. Well, before we don't want to jump too far ahead of myself here. So I'm going to wait. My blue line is a little too far for me to be sure that it's going to cross. So I'll likely have to wait for the first color bar to plot and then go for a retracement entry if it does qualify. And of course, we're not always going to get our retracement entries, but it is worth a shot to try to hop in there. All right, so the first color bar plots, everything lines up. I see my blue line does get to the correct side. And then now I would be prepared to enter this trade. Rather than scrambling for to put my order in, I'll show you guys a little tip that one of our members actually pointed this out to me, and it's been really helpful when going for retracements. And I'm not sure how it would work on Chart Trader, but I like to do this with the Dome. I prefer trading in the Dome. All right, so what I would do is we have the DPI of the first color bar would be 4661. So I would come to my Dome, put in my order confirmation. I don't use the single click order confirmation. I like to do it this way specifically for this reason, where I can leave this here. Let me do this. So it's actually best to hold the Dome so we don't get it shuffling up and down and you get the incorrect entry price. So when I'm going for a retracement, I have this set up. I know that once this bar plots, I have to wait for that bar plot to qualify the trade. So I'll watch the price. After it fully qualifies my trade, I'll watch the price, wait for it to come below my entry, and then hit my checkbox, hit my, confirm my order, and then when the price goes back up, it will fill my order, hopefully. Sometimes the markets move too fast, which has been happening this week. I have had quite a few orders jumped over. So. Oh, got an excellent question here from Mike. All right, if you set your indicator of the crossbar, so I think you're talking about the blue line, to plot during or intra-bar, wouldn't that be a way to confirm that upon the turn bar closing, it would cross the purple line so you could place an order before having to wait for the bar to close and then do a retracement? That is an option, certainly. I prefer not to. And back in the very, very early days of Pro9 Trader, before it was even released, when I first met Todd and was introduced to it, we actually did leave the blue line to plot live, so it would update live, tick by tick. And what would end up happening quite frequently is that we would get false positives. So during the plotting of the bar, it would show that it would plot over the purple line. And then when the bar closes, it actually doesn't quite get there, because what would happen is during the plotting of the bar, it would still pull down. And so the final value wasn't the same as what it was displaying during the plotting. So it's probably a little more accurately now. I haven't checked it out. I know Scott Dahlquist in the trading room uses his live. Quite a few traders do. That's certainly a way to do it. But I'm personally more a fan of just waiting, knowing for sure, and then attempting a retracement. But certainly an acceptable way. Just be aware that occasionally you may get something that looks like it's going to qualify, but the final value may be different than what it was displaying during the bar plotting. And another note about retracements as well. Usually after the next bar plots, that'll be far enough for me to think about getting into a retracement. Sometimes up until, as long as it hasn't reached profit target, I'll look to enter a retracement. But once it has hit, even if it has hit profit target for the trade, say we were looking to get in on this continuation, and it already hit profit target, but then we get a retrace, then the market starts to come down. Far too late to hop in a retracement entry, because we already had our signal to enter the trade. The market already did what we wanted it to do. We happened to miss it, and now we're expecting it to do the same thing again, and it's not obligated to do that. So I'm pretty sure the markets don't care which trades we enter. So certainly after we hit, or after the market has hit our designated profit target, if we haven't, or if we were waiting for a retracement, I would just cancel my order. I wouldn't risk it. It's far too risky for me. All right, so we'll get back to anticipating the trade. So here we go. We went over anticipating this for a retracement, meet some resistance at the high of the day, and then the market starts reversing. So the way I like to anticipate these, or form a plan of attack in my head, is say, what kind of trade setups would appear in this situation? Well, I know it's not going to be any type of trend trade short, not a single T short. My divergence reversal wasn't qualified. Not going to be a continuation short. Everything looks long. So the only other trade that we have that would appear in this run is a counter trend surf. Although they aren't strictly called counter trend surfs, it would just be a surf trade. But I find the ones that happen in these counter trend situations to be the strongest surf setups. So at this point, I can start planning ahead, review my rules if I don't have them memorized. I need to see my super trend outside of the neutral zone in either direction. And this is, I think, one of the things that kind of catches people off guard about the surf trade, is that you would expect to want the super trend outside of the neutral zone in the direction of the trade we're looking to take. But these ones that happen in these reversal runs will never look like that. So, but we only care that the super trend is outside of the neutral zone. Next, I need to see my blue line below the purple line. That's a check. But I also need to see the blue line outside of the neutral zone in the correct direction. So I need to see it below -50. So now that I see on this next bar, it's outside of the neutral zone, everything lines up. So next, I just need to see a bar with a wick or a tail. So it can be, surf trade is one that can qualify on a turn bar, purple bar, or any bar with a wick. As long as it has a wick or tail, we can enter that trade. So during the formation of this bar, as soon as it pops up and forms a wick, I would put in my red DPI price. Usually people would be concerned with running into the 50, but I find with these surf trades, they're almost always, especially these ones that happen in these reversal runs, they're almost always probably going to run into either the 20 or the 50, depending on how far during the run. But I find there's such a strong setup that I am not worried about that. If they're running into the 200, I won't enter them. But running into the 50, I feel they usually push past the 50 and at least hit profit target. And then this one likely would have. This wick doesn't look like it came to stop us out. We have a 15 tick stop for the surf trade. Would have at least hit profit target, moved straight past the 50. Could have gotten stopped out at break even, but you know, it keeps on running for a while. So, and as this continues to run, what possible trade setup could we have here? Well, there is one particular trade setup we have that looks for this type of EMA configuration, where my 20 is above my 50, above my 200, and I don't care about the white line, or my 10 EMA. And in fact, most of these trade setups, the 10 EMA will be out of order. But that is a dot trend trade. So somewhat rare. There's been a few this morning, which seems to be the case. It seems like we won't see dot trends for a while, a week or two, and then on one morning, all the markets will have one, and then we won't see one for another week or so. But I would likely have a green dot trailing this live, and then so I would need to see my turn bar plot with my green dot below it. Don't care about the super trend. Only need to see my EMAs in order, the 20 above the 50 above the 200, blue line above the purple line, and my turn bar with the green dot. See my turn bar with the green dot, it's yellow. We don't care about that because that's simply telling us that the super trend is not outside of its neutral zone, which is relevant for trades like the continuation, single T, but not for the dot trend. But also my blue line is not quite yet to the correct side of the purple line, which is likely to be the case. I do find that most of these dot trend trades qualify on the first color bar. So we see when the first color bar plots, my blue line crosses the purple line. Now with the dot trend, sometimes I will retrace. If the price retraces back to my turn bar entry price, I'll hop in there. But certainly a discretionary thing. But they are very strong setups. I do find even entering on the first color bar, they almost always at least hit profit target. So it's very rare that I find a dot trend just gets immediately stopped out. So, and then we have this continuation setup that we'd still be in. It looks like the CL has slowed down quite a bit and has kind of just hung out here for a while. So. Oh, Mike has a question about the daily dissections. When you do the daily updates, can you guys give us the updates on all of the 4 main instruments traded rather than just one, as there's a high probability we won't be trading the one instrument you happen to highlight. By the way, how do you select the instrument to highlight for a given day? Excellent question. I would love to be able to release one for all of the markets we watch, which would actually be 5 markets. But I simply don't have time to do it. It takes me a while to put that together after the market closes. Yeah, and we just simply don't have time to produce one for all 4 markets. I hope in the future we can, And as far as selecting one, uh, I try to just pick a chart at random, honestly, and one that I hadn't picked before. I don't always watch the charts all day long, so I try to be as unbiased as possible and just pick one at random and rotate through all of them throughout the week. So, all right. So NQ was a bit choppy, and then for anyone who wasn't aware, the TF has now moved to the CME, or I should say the Russell. The TF is the symbol for the Russell on the ICE exchange, and the RTY is the symbol for the Russell on the CME. So the price is quite a bit lower than what it was on the ICE exchange. I'm sure quite a few people are happy about that. I think it's the Russell is a great market, one of my favorite markets. I love the TF. I think it'll take a minute for the, or I shouldn't say a minute, a while for the RTY to kind of pick up. I don't think a ton of people have moved to this contract yet, so the volume's likely to be not as high as the TF, and they're both going to be listed on both exchanges, I believe, till next year. So probably going to see some split volume. Let's see. Mike mentions he doesn't. Do you have, Mike, do you have, are you talking about the PDF or just on the website? Okay, yeah, someone actually, our other support guy just mentioned that to me this morning, so we'll be updating that later in the day. Um, but it should be updated correctly on the master rules on the website. I'm not sure why it was likely the PDF was put up before we updated the rules and just missed that one. Yeah, see, I just clipped the image from the website. I just used the snippet tool and clipped this. But we will be updating that later today. So, one thing I would like to point out is chop. So outside of anticipating our trade setups, is choppy market conditions. There are a few things we can look for, namely my EMAs getting roped together, multiple turn bars in close proximity to each other. The strongest one, however, is the blue line bouncing in between the middle here. We really like to see the blue line coming from extremes fairly consistently. And then once it starts to bounce around in here, hovering around the neutral zone, it kind of gets a bit more iffy. And then once we see this, coupled with all these turn bars, we're back and bouncing right around the 200. We're just back and forth. Then it is a bit iffy. There we go. Thanks, Mike. Sorry about that. All right, so screen was not updating. Here we go. So we have multiple turn bars in close proximity. So the majority of these turn bars, or these bars, are turn bars. It means there's a lot of indecision in the market. We're just back and forth, wrapped around this 200 EMA. See my blue line bouncing around in the middle here. This is one of the strongest signs. So this, to me, when I see this, I really perk my antennas up. Usually I would like to see the purple line hovering around the zero and the super trend as well. But when I see this happening, I do become a little bit more cautious about some trades. And oftentimes, we can't always determine that we're in chop ahead of time or that we're heading into chop. But this doesn't really look like chop. We get a bounce off the zero line here, which is, pretty decent sometimes. But I didn't come from an extreme with my blue line. That would be one of my first clues. Did hit an extreme here, but then bounced off the zero line. Coming back down, so I very well may have taken this, but we may be a little too close to the low of the day. So yeah, it looks about 8 ticks from the low, which isn't quite where we want to be. We need at least 9 ticks of space. So very iffy trade, but my purple line isn't there. I mean, it's very borderline. Sometimes we do have to, or we do end up taking a losing trade before we fully realize we're in chop. Can't always be avoided ahead of time. It's not a perfect crystal ball, but we do have some indications that, we are heading into chop. So even if I had taken this trade for whatever reason, wasn't paying attention to the low, that type of thing, would have been stopped out. But now, after I see this, I am pretty confident that I'm in chop. So I'm going to avoid taking any trades until I see a trade win without me. That means I might miss out on a run. If you're, willing to take every qualified trade and not care about chop, you'll probably hit any runs that happen. But again, we get another turn bar, another continuation entry, but we still have the same kind of pattern here, which is doesn't give me a lot of confidence in that there's a strong trend. So this is the way I look at it. I think it's the most simple way to look at it is, since most of our trades are trend trades, why would we want to enter a trend trade when there's not really a clear indication of the trend? Get halfway to our profit target, get stopped out. And then this third one hits, but still couldn't even enter this one because the low of the day, we're too close to the low of the day. Purple line isn't quite there, possibly on a breakout. If we wanted to, but it would still be a bit risky for me, even this point. Came from in here, I probably would have passed on that. I like to watch a trade win without me before I hop into another trade. So, I mean, that was quite a run. Would have helped to make up for some of these, but we wouldn't have known that ahead of time. So, one of those things. And, whenever I make a decision to sit out of a trade or let a trade pass me by, I'm not going to worry about what it does. I don't care. I'm not in it. I don't feel there's anything positive about looking back at trades and saying, oh, I should have taken this trade. Well, at the time that it happened, without hindsight, did it look like a good trade? If the answer is no, then we probably made the correct decision. I mean, sometimes in the effort to avoid losing trades, we're going to miss out on some winning trades. So, but the point is, we just have to be okay with whatever trading decisions we make, because by the time we realize or decide we should change our mind, it's often too late to get in the trade. And why really waste any mental energy, going back in the past with this whole woulda, shoulda, coulda type attitude? There may be some information or something we can learn from that situation, but and even that is not always a guarantee. So, I mean, this situation right here, I would not have entered this trade, even though, looking back, oh, that would have been a great trade, but had no way of knowing. Right here, all this just happened right here. I'm not extremely confident that we're just going to bust through the low of the day, you know. Then we come into some more chop, not too much. And this is more of a situation where we can avoid some trades here. Once I see this bouncing off the 50, these EMAs roped together. See my blue line starting to bounce around in here. Purple line hovering around the 0 line, just kind of weaving back and forth. Probably could have been avoided. Other things to look out for, whenever I see my EMAs kind of converging into the 200. So I have the 200 going like this. These 10 and 20s, while being roped together, are kind of converging on here. So we kind of see this price get locked in a channel here, and it's just bouncing back and forth. So I avoid trades in this situation. I find it's much too risky. I don't like when the price gets locked in between the 200 and my other EMAs. Typically it's the 50 and the 200, but this situation as well with the 10 and 20 right on top of each other, just all of that spells bad news to me. I mean, we kind of see this happen, and then it just kind of continues. Even though we're not heading into the 200, I would still avoid taking any shorts, because you'll see this happen often. If you go back in your charts and you see this kind of situation where you have your EMAs converging like this, you'll see this same pattern happen quite a bit. It doesn't happen every single time. I don't think there's anything in trading that happens every single time you see certain patterns, but the majority of the time this type of situation is extremely risky, and I will often wait until I'm clear of these EMAs in one direction or the other before I would hop in a trade. So I think watching for this will save us a lot of headaches. Aside from the other signs of chop, you know, quite a few turn bars, price just bouncing back and forth. A purple line right around the 0 line. You know, we get the blue line kind of just back and forth. It does hit an extreme, but it's still kind of stuck around the middle here. So when I see the blue line get back to an extreme, it's not always a sure thing that we're out of chop. So I will often wait until we're clear of that situation. So if we look back over the last couple days, there was quite a bit of chop. So familiarizing yourself with those rules or things to look out for can save you quite a bit of mental anguish at times. And it really was a rough trading week. Wednesday and Thursday were rough. And there's not always a way to avoid some of these situations. So we ultimately have to know that, you know, we are going to take some losses. Some days, weeks are going to be rougher than others. We can use certain things to look for to help us avoid some of those situations, but again, nothing is 100%. So I know with momentums, some people look for this, you know, when I have a full divergence setting up toward the end of a run, they'll avoid taking a momentum. So I don't always find that 100%, but it may be something you want to pay attention to and just kind of keep track of as you watch the markets. When you see a lot of signs of divergence, we see, because this does turn into a fully qualified divergence reversal. So I get quite a bit of divergence on the blue line. Super trend is very bloated, does just hit, looks like doesn't quite get to the extreme zone, but very close. So it doesn't quite qualify as a divergence reversal. And I have my green dot, so I have quite a few signs of divergence, and we're heading into the low of the day now, even though my blue line, or my purple line, is far outside of the neutral zone. These other signs of divergence may cause me to be a little more cautious of these momentum trades. Oh, excuse me one second, everyone. All right, so, and then, it's kind of a double-edged sword with being too cautious with some of the trades, and because once, especially if we take a losing trade, and it's part of that psychological aspect of trading that affects everyone. Of course, it's always rough taking a loss, but then it can, if we let it and don't train ourselves to think past it, it can affect our judgment for trades later in the day. So we want to make sure if we're assessing a trade and we find it to be too risky, that we do have some good reasons, and also that, if we decide to sit out of a trade and it wins, that's okay. We made the decision to sit out of that trade, so we have to be okay with whatever happens with that. I really find that getting stuck in oh, I should have done this or I should have done that is ultimately self-defeating. It just kind of causes a whole lot of other a whole slew of problems with our judgment when it comes to trading. So what I prefer to do is look at it as an opportunity to learn and say, what is it about this particular trading situation that caused me to stay out of it? And then, take note of that and look at the next trade, or, or see if that holds true more often than not. I mean, if we find something that can help us avoid 3 or 4 losing trades by paying attention to a certain indicator or configuration with the indicators, like the EMAs being roped tightly together, and we miss out on one winning trade, well, we've really saved ourselves and ultimately come out ahead, because avoiding losing trades, I think, is more valuable than missing out on one winning trade. Unless it's a home run trade, but those are fairly rare. So give me one second here. All right, so if anyone wants to take a look at any particular trade setups, maybe you were trading during the week, feel free to throw those out here. Or if you just have any other general questions. And then I'm actually just going to do a side by side of our good friends, the Russell, on either one of these different contracts. So there we go. We'll see how similar these are now. So quite a bit different, and that's likely because the volume's different, as I was mentioning earlier. And it'll likely be that way until more people move to the RTY. So if you do add it because it is on the CME, oh yes, Mike, getting you into the next class, we'll certainly do that. So that'll be next Tuesday. But I'll shoot you an email with instructions for that after we're done here. Let's see. So just kind of some slow days on the market. Not necessarily slow, but um, a bit rough, kind of choppy. We get quite a few of these double wicks on the momentum. If I see this happening fairly frequently, I will become a little bit more skeptical of the momentum trades. They are probably the trade with the lowest win ratio out of all the trades. It's still, slightly below 80%, maybe around between 75 and 80, fairly consistently. But the markets do occasionally start spitting out these double wicks a lot, especially when there's just a lot of chop in general. So also something to keep in mind. I don't like to avoid all momentum trades, but another thing I look for with the momentum trades is previous leg length. Where I wish I could find a good example of that, because this doesn't really illustrate it that well. Now, can't really find a good example of that, but yeah, see, there was a ton of movement on the NQ. What was this, Wednesday? And likely would have put you out ahead if you took every qualified trade. Um, but we do have to be prepared to take some losses in that as well. So. And there were a few that I don't know. I do believe there was 10 a.m. news uh, on Wednesday, which could have kept us out of some of these. Another thing, which I'm sure all you guys are aware, is really pay attention to market news. We don't trade 5 minutes before or 5 minutes after a news event. And the reason for that is that we have found a higher frequency of losing trades during that window. I know some traders will sit out 10 minutes before and after news, some even longer. I don't always find that's necessary. I mean, sometimes I do catch a losing trade outside of news or right outside of news, but you know, not always a 100% thing. And you will see winning trades happen during news. But if we look back over these news events, historically, we will find many more losing qualified trades than winning ones. So again, it goes back to that. If we can avoid 2 or 3 losing trades for every 1 winning trade that we pass up, then we're actually coming out ahead. because that one winning trade may not make up for those other qualified losses that we took during news. So very important to pay attention if we're not already doing so. So, all right, excuse me for a second. Just had to step away. All right, and we're back here. All right, so let's just kind of walk through the NQ this morning, see where we're at, what was going on here. What is the exact opening bell? So our first one, if we were quick, would be this surf short, which I'm not sure would have hit profit target. Let's see, 58.17.25, and the low is 58.16.25. So nope, that's 4 ticks. Wouldn't have quite made it if we were looking in the hop in that one right at the opening bell. And then, something I do want to point out, as this has happened to me many times this week, is I'll be in a trade and the market just kisses my entry price or my profit target, but the profit target does not get filled. And then if I'm not using an ATM or I'm not quick, the market could quickly reverse and stop me out. So if you're using an ATM, I suggest setting all the stop strategies to auto break even. At least that way you catch a scratch. So it's happened to me many times, especially this week. I've had orders jumped over quite often, which is going to happen, and there's not much we can do about it. We cannot guarantee that our orders get filled. So if we miss our order and the market moves too far past it, I just cancel the order. You know, one of those things, just a part of trading. But so if the market does touch our profit target but doesn't fill the order, it is advisable to move all stops to break even at least. That way, if the market reverses, we get stopped out at break even, don't lose anything except for commissions. So that can save us quite a few headaches as well, because I guarantee you the first time that the market kisses your profit target and reverses on you, and if you didn't have one of your stops at break even and it gets you a full stop at what should have, you know, been a profit target, it's not a great feeling when that happens. So it's a little side detail there. So then we get a bit of chop here. Do have a uh, continuation that does just hit profit target. So I wasn't really watching the NQ this morning. Would I have entered this one? Um, Probably not, just because I got all this noise here back and forth, up and down around these EMAs, and they're all kind of going back and forth all over each other. Not something I'm really confident about, and it would have barely hit profit target, and it could have been a situation where it was a scratch. So, and then as the market reverses, have this momentum, which may have also got stopped out. Let's see, at 10.25 was our entry, and the high is 14.25. So that is exactly 16 ticks, and we have a 15 tick stop. We could enter this second one after getting stopped out. Can certainly enter that. We have enough space before heading into the 200. And it would have hit profit target, get stopped out at break even. Then we're right on top of the 200. So we don't enter trades into the 200. That is a universal rule. We could just as easily bounce off, and there's never a guaranteed way to tell if we're just going to move through the 200. So something to keep in mind. This goes for all trade setups. Just do not take a trade into the 200. Generally, a tick or two past is fine with me, but we do have to realize that it's still a bit risky, as we could certainly move a tick or two past the 200 and the market could just reverse. So another momentum right on the 200 would have avoided that one as well. So not a ton of trade setups. And then we finally get into this where we have a clear trend, which would be the first really good run of the day. I would like to point out the money differences between our money management strategy. This is something I like to stress and just make sure everyone understands the different, and it really comes down to the trailing options. So we have our 22 tick stop that we adjust to 18 ticks before we hit our profit target. We'll hit our profit target at the close of this bar. Now, if the market kind of takes off, we don't get stopped out at break even, then we'll begin trailing at the low of the previous bar after the fourth color bar from our entry bar plots. So if we enter on the turn bar, that'll be bar 5. If we enter on the first color bar, that'll be bar 6. And we wait to that point. So if we look at our entry price here, it is 58.1775. That'll be the DPI that creates this turn bar. And the low of this bar is 58.18. So now we're one tick above break even. We don't want to give our runner the opportunity to take profit away from us. The next bar plots, we adjust to the low of this bar. And once the 6th bar from our entry bar plots, then we can widen to the DPI and the opposite color DPI. So this will be the red DPI price since we're trending along. So again, now we'd move our stop to 58.1825. We could leave it at 58.20, which would be the low of bar 7, and we could continue trailing at the low of the previous bar. Certainly an acceptable trailing stop, but there are pros and cons to each one of these. Really the only con I see with widening to the DPI is that I widen to the red DPI here, 58.1825, so now I'm 2 ticks better than break even, and the next bar stops me out. The next bar is a turn bar, and I say, oh man, I only got 2 ticks instead of 7 ticks. So I gave up 25 bucks for the opportunity to take part in a long run should the market continue to move. Sometimes it makes sense to do that. I think it makes sense to do that in every situation that I get a runner because it's worth it to me to quote unquote give up those ticks. And another way I look at it as well is that that isn't my money until I'm out of the trade. So while I'm still in the trade, my goal is to maximize my profit. Whether that happens, I can't know for sure, but I know that doing this strategy over time really produces the best odds of taking part in these really long runs to their completion. So, and we'll look at this both ways. So either way, we're trailing at the low of the previous bar or the red DPI. We're still in the trade. We haven't encountered any wicks that would stop us out at the low of the previous bar. Would have rode over this one as well. So right now we're kind of in the same situation either way, and probably have a little bit more tick secured. We'd be trailing at 58, 24, 25 now. But we also have to consider, like in this situation with this momentum bar, if this wick came down far enough to stop out our runner that was trailing at the low of the previous bar, then we have to make the decision to hop back in on a momentum trade where we're heading into the high of the day, and we're 12 bars into this run. So, and we haven't really experienced really long runs or a very consistent trend in either direction. This is the first really consistent trend of the day. So, and that's another reason I like to trail at the DPI price when I have that opportunity, is it eliminates me from making another decision where I can just have my stop where it is, not worry about it, and just wait for the next bar to plot, and then adjust my stop. Oh, well, this is a good question from Mike. With a 22 tick stop, that translates into approximately 5 bars of profit movement. Have you guys looked at how often it would be better to close out the runner after a certain number of overall bars versus letting it trail and get stopped out? Not particularly with this strategy, and that's, I can understand looking at it that way if you're, if you find it's more effective to just take your profit and run. You're looking for a certain daily profit target. And I don't actually trade it that way with the system. I do think over time, trailing by the DPI price is better, just because it gives us the opportunity to, take part in the whole run. If we get a run that goes 25 bars, if you're okay with hopping out of the trade at 10 bars or 12 bars or whatever it is, that's perfectly fine. I can't tell you not to do that. I can only tell you we don't do that, and that's not something we teach. And the idea is because if we've already hit our profit target, we're in a free trade that isn't going to lose us money. So this is all profit after we've already taken our initial profit target. Why not just trail and let ourselves give ourselves the best opportunity to take part in the entirety of that run? Yeah, we do get stopped out by a turn bar, and we don't get as much profit if we were trailing at the low of the previous bar. But trailing at the low of the previous bar, we also get into situations where we get stopped out, have a momentum trade. It's pretty far in the run. Then we have to make a decision. Well, now am I risking taking a trade running into that might just reverse? The next bar could be a turn bar. So it's kind of a trade-off either way. I personally don't like the idea of taking a trade after, or just, hopping out of the trade after a certain number of bars. Because there's going to be a time where you hop out of a trade at 10 bars and then the move went 25 bars. And I know it's easy to say uh, I wouldn't be kicking myself over it, but I probably would anyway, because it's just a psychological thing. Your brain reacts to the perceived loss of profit. But I mean, if you're okay with hopping out of a trade after 8 bars of profit, that's certainly okay. It's just not what we do. So. And maybe if we were doing a different type of uh, strategy, but I think having it, with the runner, once it moves to the point where trailing, that's a free trade. So why not try to maximize the profit? We're not always going to run, but when that happens, we'll be happy we have that trailing stop the way we have it. So that's, I mean, I have done considerable back testing with the trailing stop at the DPI, and I think, and my numbers show me that that's the best odds of maximizing profit over time. So, I mean, you do get those situations where right when you widen to the DPI, you get stopped out. But for those times when the market takes off, you'll be glad you were trailing right over all of those wicks and tails, and then eventually you get stopped out by a turn bar. So, all right, everyone, we are down to the end. If there are any more last-minute questions, feel free to throw those out, or forever hold your peace. Unless you just want to email us at support, we'll try to get back to you as soon as possible. And Mike will get you set up for that next Tuesday. All right, you're welcome, Diane. Thank you, everyone, for joining me. If you guys have any questions, of course, after the class, anything pops up, you can always feel free to send an email to our support, Academy Day Trading, at support@academydaytrading.com. All right, thank you, everyone, for joining me. Hope you were able to learn a few little tidbits that we can apply to our trading. Hope the rest of the trading day treats you well. Hope everyone has a wonderful weekend, and until next time, happy trading.